Okay, this is Jeff Scott. Welcome to this week's review. I'm trying a little bit different camcorder as, for whatever reason, Snagit doesn't want to work with this machine. So hopefully this will come out. If not, I'll be doing take two. It is the 13th of December, and I titled today Mr. Market's Wild Ride. I don't know about you guys, but what a crazy week. Now, good news is my trading account was up on the week, and that's mostly because Monday and Tuesday were unbelievable. Wednesday I had my worst day of the year, by far, and Thursday and Friday I clawed some back. Well, actually it looks a lot like the market did as well. So we'll take a look at that. It's funny, I saw a video this week where some guy wrote multiple videos and basically was telling suggesting that all these educators need to be showing their P&Ls. I show my P&L all the time, and I don't even charge for this. This is for education purposes only. Anything I recommend is in the spirit of education, not investment advice. I'm a doctor, not a broker. I am independent. I am not affiliated with any software vendor or trading company. I pay for the tools that I use. And trading involves risk, and you and your loan are solely responsible for any investment decisions you make. I call what I do be your own guru. I don't consider myself a guru, but the point is you've got to learn something and get good at it and rinse, wash, repeat over and over again while continuously getting education to make it even better. I started with canceling, and I still read this book every year or so, How to Make Money in Stocks. Clearly it's been improved over the years, in my opinion. Gil Morales became a friend and also brought Gap Bob's Pocket Pivots, etc. Ian Woodward, who really taught me how to make money in trading back years of using HGSI, and before that with Telescan. What a wonderful person that we lost a few years ago. Speaking of lost, George Lee passed away within the last year as well. Mark Minervini, another disciple of O'Neill. Last year I went to his live meeting. I didn't go this year. It seemed like a lot of money for a web seminar, but I'll probably go live again next year if they are live. When I sat there, it reinforced some of the good things I was doing, and it did call out some things I could do better. John Person, also a friend, got to know John a lot over the last couple of years as we're both lived down here in Palm Beach County. Actually at one point I kept a desk at his office and would go in there and hide from work and trade. Then we got busy at work and that was over. And now we have COVID, so I never leave the house anyways. John is brilliant. He's a great trader. He used to own a brokerage. He's an author. And I've incorporated as an add-on with John his stuff into HGSI. Van Tharp, the king of position size and money management. Everybody has some of that I've mentioned because you really need that if you're going to succeed. Sagar with his great Q tools and add-ons. Roy Kelly, who I've been using a couple of his different things, he's actually got a nice way of teaching. I've been to a couple of his live meetings. And Ron Brown, who became Ian's partner. I do own a lot of programs. I wish to say I use everything I pay for. I've bought things and I paid thousands of dollars and then realized that they were no better than what I had before. If I was restricted, I'd have to have TradeStation with John's indicators and certainly Sagar's Q add-on and Dr. K's add-ons. In Thinkorswim, I have a number of indicators, a lot of them coded for me by my favorite coder, Bob Mager. And then for analytics, I use HGSI and EdgeRater, mostly aftermarket, although HGSI, you can pull data in real time from Thinkorswim. Prior to COVID, I never worked at my computer during the day. I was always traveling, being a sales guy and supporting a large company. I'm sure part of my return this year is because I'm actually in the market in between Zoom calls. And I'm never paid by any vendor when you buy something that I suggest or use. And from time to time, somebody will offer me money to promote them or to bring them on. And my approach is simple. I'm unpaid. I want to stay unpaid. And any discounts that you might give to me, or any payment should be passed to the purchaser as a discount. So again, I'm an unpaid volunteer, and this should be considered what it is. Non-professional, amateur education. Here's the website for HGSI. Why would I promote this if I get nothing? Because I love the program and I'm very close with the proprietor. It's a wonderful tool. Like every other tool, it has its limitations. But if you want to scan the market and get to a list of great stocks, I guess I could just point to my neighbor, and I call her name Kathy. And Kathy, earlier this week, we were talking, and she's up 48%. How much education has Kathy had in trading? She watches my videos, and she found the top 50 stocks thing in HGSI, and she exclusively trades those. Imagine how good she'll be if she actually learned how to use options and position sizing and money management. But just by using HGSI and taking the top stocks that it serves up, she's had a great return. And every once in a while, she's having a great return on a stock that I missed. Stock patterns are cyclical, and my goodness, this is the story of life, and it is so tough right now because it's really easy in 2009 in March, hell, in April of this year, March, April of this year, after the market's been trashed, and then you start to see some little green things shooting out of the ground, and then the plant grows, and the next thing you know, the stock market's all rolling up, fiercely moving up. Easy peasy to make money. Having 100% returns here as the market came out of the bottom was unheard of. In February, if you go back and look at late January, early February, you can clearly see these giant down days occurred over on the left, on the shoulder here, as the market was rolling over. And then on the way down, all I did was buy contra ETFs to avoid getting killed on my existing long positions, which, as always, I don't care how much money I make, I suck during ferocious market changes like that. And I was late to empty out. But I know how I suck, and I know what I do well, and I just bought the shitload of FAZ, which I should have done and sold my Bank of America position, but I bought a crap load of FAZ. I shorted triple Qs and did other things that kept me from getting horribly damaged. I got damaged like everybody else. And then what happened? We came right back here into the buy zone. Now, where are we today? You know, on Monday, felt like we're going to the moon. Tuesday, on my portfolio at least, felt like we're going to the moon. And then Wednesday happened, and I must have lost $500,000 on Wednesday. Don't tell my wife, she'll kill me. The good news is I made $600,000 between Monday, Tuesday, Thursday, and Friday, so I finished up $100 on the week. But it didn't feel good losing $500,000. Now, how did I lose $500,000? I lost it because I have too many positions, something that my friend Kathy shares with me. I leverage up the wazoo, and I use options, which leverages my leverage. You don't get 200% returns in the market by buying. You could buy stocks, but you'd have to be like T.G. Watkins, who gets crazy returns buying stocks, but he works too hard. It was an interesting week, I'll put it that way. So I ended the week pretty happy. I mean, if I made $100,000 a week, I think everybody in my family would be happy. But I was really happy Tuesday. The one thing I think that's important in my success as a trader is the psychobabble stuff. I have no memory when it comes to bad things. Thursday, I approached the market as if it was a new day, and I was doing well. Wednesday night, my wife would have killed me if she knew I lost $500,000, but I didn't tell her, and I didn't care because I trust my system. And so I've been rapidly in and out of these three boxes, and I went back into stocks pretty hard on Thursday, or options, I should say. And Friday, I actually made money even though the markets were soft. Interesting week. And I also got to credit a little bit to TG because I look at some of the things that I've made a lot of money lately, and you know, I've made comments before. T.G. Watkins, also known as the Moxie Trader, got to know his dad, through Ian and other venues. And then TG grew up and he became a trader, and now he actually works with John Carter. And he has this Moxie thing, which he showed me before he went commercial with it. And he's really good at picking short-term stock movements. It's not my deal. I'm a much slower, boring person than that. And he kept calling me, and we would talk, and he'd be getting to go long on the COVID destroyed things like airlines and energy and casinos and movie theaters. And I'd say, not yet. It's too early. And I took his advice, which turned out to be perhaps the last time they went down. And, part of why I did okay this week is airlines, energy, casinos. I mean, Penn National Gaming has been great for me. So it's interesting time right now. My biggest position is Amazon. Why do I hold it? Well, it turns out that in portfolio margin, they risk everything. And I rely on margin, and you'll see when I show you some numbers how important margin is to me. But if I just buy a put, like right now I got 3150 puts on my Amazon, that will give me $3150 worth of their margin calculations. If I don't have that put, they'll probably de-risk the Amazon to about $2,500. So I just leave puts on my Amazon. One, I never worry about blowing up my account because it's still the biggest position, and two, it just gives me a ton of margin. So interesting week. You got to adjust how you trade and what you're trading with, where that market cycle is. Speaking of the cycle, so what I've got here is from here to the end of my arrow point, those are ETFs or the markets or futures. Then I have materials, very few winners, lots of losers. Energy, one winner, lots of losers. Financial, few winners, lots of losers. This is all Friday work. Industrials 50-50, staples a little bit stronger than that. Technology stocks less than 50-50. Discretionary weak. Utilities 50-50, healthcare less than 50-50. Communications probably the strongest on the bunch. Real estate 50-50. Foreign markets were weak. And then I have the MarketSmith 300 that came out on Friday. And just to get a sense every day of if there's any strength in this market. So if you look at Friday, and I look at it, you wonder how I actually made money, because Friday was a tough week. But, you had selective stocks blow up, like Restoration Hardware, and then you had other stocks do very, very well. Now, I guess this is a great picture of the week. And I'm not going to teach you every indicator here because, frankly, I don't have time, and you probably don't want to know anyways. But this is a picture from Sager's Q Tools, and it's just a picture of the ETFs. So I've got the spiders, I got the Qs, I've got the diamonds, and I got the Russell. I usually use that order no matter what program. And what you can see here, and I don't care which one I look at, you had strong days on Monday and Tuesday. Wednesday, you hit a lot of negatives here. On Wednesday, you picked up a person sell signal as you reversed, bearish engulfing pattern. You had a reversal signal from Q Tools, and you had a cycle peak, major cycle peak from Kelly's Tools. Interestingly, the weekly bongo never reverted. And we also pulled into these double lines here, which are a resistance area. So at resistance, we had a sell signal and massive down days, regardless of which indicator, although clearly worse on the spiders and the NASDAQ. What did we end up pulling into? We shot through a short-term resistance or support, but we ended up on long-term support. These are auto trend lines drawn by Sager's Tools. On the Qs, we pulled into support on Sager's Tools and bounced. On the diamonds, we cut through and closed, opened above and closed above support on the diamonds, and we closed right at support on the Russell. I think that's interesting, and it tells me that if we open up this week, perhaps a Santa Claus rally is starting, but we're also precarious that if we open up down, Look at the next line of support from a trend line, although as you can see these yellow and other lines are potential support underneath. Very quickly, let's look at Major Markets Plus, and then let me do the thing that I probably shouldn't do. So just to put my money where my mouth is, and again, I saw that thing about telling people who do videos they should share their P&L. Let me show you the impact of margin. You can see here, this is my overall P&L to the date. Those are 7 digits to the left of the decimal point. You can see my cash and sweep level is negative. Why is that negative? That tells you that I have margin, a lot of margin. If I go up here, option buying power, I still have plenty of power to buy stuff. Now look at this interesting thing. Net liquid and day trades in this account are 2.7 million. That's my sweep, meaning including the margin. That's my P&L to date. What does this tell you? I didn't start the year with 300,000. I take money out of this account. This is my living account. This is how I'm buying my house in Santa Fe. I'm paying myself every day on this account. So when I look at my returns, I'm actually looking at probably, I've got the benefit of close to $5 million in margin to trade with. And so do I calculate a return on my starting point of 1.4-ish million, which would get me to about 175%. That's what I use, but because of margin, I get a lot more to play with. So enough of that. And oh, by the way, and I still have profits in the market, so I'll probably be selling a bunch of things before the end of the year because of tax purposes, wanting to take advantage of the current tax system. More information than you need to know, but I kind of agree with that guy. If somebody's going to act like they know something, and I'm just an amateur, they probably should share with you of how big their account is and what their results are. So I'm going to show you later something, but imagine if I was drawing a trend line here. I guess I could do that. Let me get a drawing, tools, trend line. Oh, I don't like that. I don't like that. I never draw much on this. Let me try that again. I could probably go somewhere like that. I could probably come in here and do another trend line and go something like this. And what you have there is a megaphone. And I'll show you this extended. And that's something that's concerning if, and we are at the top, and when we hit this top before, we came right back down. 1, 2, will this be the third time? So this is the E-mini futures. I like the futures to look at because they do capture the entire market of the day, of the week. The most important things as I look here are probably not the comment about the megaphone yet. You notice and this is daily charts. Oh, this is weekly. Let me go back for a second and switch to daily. I actually wanted to do that on the weekly anyway, so that is quite okay. Here's the daily charts, and does help to look. Wednesday was the high of the year. It was also the all-time high, and we sold off. So we ran into it, we sold off. High jump was pretty much triggered, we sold off. This is not a very big correction. We've got bottoming tails. We pulled into the 17. If you ask me, am I long, short, or am I bullish or bearish? I'm bullish. The seasonality is strong. Nice bottoming tails. We're at the obvious place to bounce. I am aware of that megaphone, and I'd like to see us get above it and then test it so I can eliminate it, but that's something we'll see. The NASDAQ futures also hit an all-time high on Wednesday intraday and sold off. Again, pull back into a normal place where you'd expect them to bounce. The Dow futures same story, bottoming tails, closing above the 17-day. There's been very little damage done, I guess is my point. Russell Futures all-time high hit on Wednesday and really went sideways thereafter, stronger than the others. The VIX, if you want to find reasons to be concerned, the VIX futures bounced a little bit on Friday with a new person buy signal. Now, I bet TG had a buy signal on those because he picks these things up early. I look at this, I've got 50 and 200 days to get above. Do I expect a bounce? Absolutely. I mean, we are overdue by far. That doesn't mean we're going to get one, but I did short some triple Qs, TQQQ, and bought some VIX to last me over the weekend, just in case we get a big down open. By the way, I use puts mostly as protection. I buy contras. I bought like SQQQ, which I bought some on Friday as well. I short expensive contras, expensive long ETFs like TQQQ, because I get more bang for the buck. And I do that all the time just in case. And I can only imagine what my return would be if I eliminated all those premiums. But I sleep better at night. The dollar bouncing here, if this is a bottom in the dollar, if the dollar goes higher, that will impact gold and other metals and other things as well. So I look at the markets. Yeah, we're going to go down eventually, and maybe it's this week. I just don't think so. Could be, though. And that's why I bought the protection. Weekly, as you could see, we're getting pretty extended from that 200-day moving average. The VIX, little green weekly shoot, and the dollar, a little shoot. Here's that Megaphone. I don't know. I remember going to one of John Person's meetings, and my guess is it was back at this time, and he put the Megaphone out. Nah, it had to be after that. It could have been here. And maybe it was back there. And he talked about the Megaphone, and damn if we didn't come down and test. It shows you how little our test was earlier this year. Do I think we're going to come down here? No. Do I think perhaps you can get a linear regression chart up here and that we could come down and test it? Yes. So I do think longer term we've got some pain coming. I just don't know if it's coming in this time of the season. Rates, they both came down a little bit, sitting in an upward channel. No big deal. AD lines, ease is the net magic word this time, eased off their highs. The small stocks a little bit stronger than the large stocks. The AD line here on the NYSE eased off its all-time highs. Look at the Russell ETF just rocketing up and not caring while the others have turned down. Rates eased, bonds turned up. If you look at stocks above the 200-day, stocks above the 40-day, they both eased off of overbought. If you look at the T2121, the 12-week new high, new low ratio, stocks eased off of extremes. We're still overbought. We're just less extreme overbought. The McClellans on both the daily and the weekly, the oscillators doing a zero retest. That's one of the things we look for. A bounce off of the zero line will be bullish. At this point, you could still say we had higher highs and not higher highs on the summation index and the oscillator, and I'd say, so what else is new? We've had divergences there for forever. The buckets, 2/3 of the stocks in the S&P 1500 are trading below the midline of their Bollinger Bands. Bullish, but not an extreme. And if I look at the percentage of the stocks up at the top or above, it's high, but not anywhere close to an extreme. This is one of my Edge Rater, favorite Edge Rater screens. Speaking of Edge Rater, the Hindenburg Omen, I can run this by popping a button, and I run it against the NASDAQ and the NYSE, and as you can see here, there's no evidence of a Hindenburg Omen. We are getting to a point where we're at all-time highs, so I'll be paying more attention to the HINDYs because I know as much as they're an old wives' tale, I haven't seen a major market correction without at least one or two Hindenburgs since I've been trading. And I don't think Ian saw them since the 50s. I wasn't around trading in the 50s. I wasn't even around until the late 50s. Market tone, bandwidth, Woody, good and bad. The bad is we're now starting to see some deterioration with some yellow popping up. And you see that at least in let's see, I guess it's probably the NASDAQ 100, there's some volatility, but most of the volatility that we saw earlier in the year has resolved. Talk a little bit about the wild ride we had. Now, I mentioned that I was up, all right? If you think about the size of my margin account, I was up less than 2% on the week. I have had weeks when I'm up a lot more. On Wednesday, I was down about 10%. Yeah. It was a big down day. Fortunately, Thursday and Friday and Monday and Tuesday were good, and I was up some on the week. Now, the problem with doing the analysis on the right, which is called a group performance analysis, it allows me to take groups and then ask a question from end of day Friday until end of day Friday, so a week's worth of trades, not from beginning of day, but closing price to closing price. It says right here, what was the performance of that group? I have no way of noting if things are short. I have no way of telling you which are protected. And my triple Q, TQQQ, would have looked like a long, even though I was shorted. So I just get it for the sake of getting an idea. So I find the S&P 500, and usually I color it something. Here it is. S&P 500 was down about 1%. Okay. Then I ask where were the IBD momentum growth stocks? I see that MarketSmith 250 was up 0.63. I see that the IBD 85, which is the weekend review from last Friday, was down 0.15. I see the IBD 50 was down 0.49. Okay, and then I asked for a couple of my lists. Again, not paying attention to long and shorts, I was down 0.47. That's not where I was because I have protection. My buy watch list was actually only down a little bit if I took them all, and my more aggressive buy list, the filter buys, was down 0.6. The canaries were down 1.15. So clearly, for my kind of stocks, it was not a great week. Now I look at what led. Bottom fishing for nuggets and shorting candidates were the two strongest groups. Well, that's going to tell you something. That's going to tell you things that did lousy the week before actually rebounded. You have squeezing potential reversals to the downside, and then you have the relative strength line blue dot. So you have high relative strength and you have low relative strength. This was crazy week, all right? If I look over here, earnings per share rank plus relative share rank, relative strength rank, earnings per share rank, relative strength rank, group rank, up to 99. The most you can have is 297. So what do I see? The low ERG stocks, of which there are very few, so I don't usually pay attention to the first three dots, but they were way up. And then you had a bump near the top, but the high ERG stocks, again, small numbers, were actually negative. And there is no, I don't see a curve here. I could write the curve like this. I could write the curve like that. This market just made no sense this week. EPS rank kind of made a difference, but it was okay if you had lousy earnings. It was good to be really high relative strength here. This is the relative strength, 0 to 100. This is the return, but you did just as well with having horrible relative strength. Group rank didn't matter. Stocks that were accumulating the prior week outperformed. Boxes I don't look at on a short period of time. Yeah, I call that a wild ride. I can't make any sense of it, and that probably explains my week. Sector strength, again, we're seeing early signs of weakness, and real estate has turned red. So take a look at Sager's Q tools. And Sager, you need to send me a watermark or something so I can put it on the slide so you can get credit. fact, it says Q Edge. Now, I'm going to make it bigger. This is one of my favorite tools, and I have this running on my computer all day long. Fortunately, I have fast internet because it just sucks, because it's constantly updating. The other caveat is, to the best of my knowledge, the sectors are built off the S&P 1500, so they may be a little bit different than the spider sectors, which are built off the 500. This says 1 day, this says 1 day. Well, they're the same, but if you look at my screen at 9:31 on Monday, this will be real time, and this will say 1 day. And I get a sense of the breadth of the market at the moment, and I can understand what percent of stocks or sectors are positive. We had 2 versus 9 at the close on Friday. It says 1 day because the market's not open today. What about the industry groups? You can see here we had only 27% were positive, and only a third of the stocks were up. That tells you that even though I said I had a good day, it's probably because of the junk stocks, because all the markets were weak. Okay, that's interesting. Utilities, which I don't own any, outperformed on Friday. Communication services, I've got quite a few of those, did well. Okay, now I'm going to go down here. So now I've got those same pie graphs. Friday, now this one here, you notice it's in a red background. This will be real time. So we're going to skip that one. So you got Friday, you have 2 days, you've got the week. So the week was overall a negative week. Okay, you could see more red on sectors, industry groups, and stocks. 2 weeks and a month, much more bullish. Now, to me, this is like having a instrument panel of telling me the health of the market on a real-time basis. Now, let's say I want to understand what industry groups and sectors are leading. So here is a picture of sectors. And I could look at short-term and say, tell me on Friday what's working now. Again, these are updating real-time, and I would have seen that utilities and communications. Let's say I'm a slower trader and I want to know over the last 5 days, so let's go at a 5-day pace. Utilities, industrials, and communications. Now let's say that I want to play where the winners are. I'm only interested in those 3 groups. Hit this. And these will be the industry groups that are within those 3 sectors. Now I can do the same thing, and I could say over the last 2 days, which are the industry groups that are doing the best. And they'll list here. Now I've played around with this a lot, and I actually like looking at just 1 day. So these are the industry groups that are outperforming. And I know that if I'm above 140, that I'm a really strong industry group because I've only got 147. So I'm going to love those, and I'm going to hit the peer analysis. And so now I've used purely technicals to top down, looking at price movement. And then these are the stocks that are in the S&P 1500 that are also in these strong industry groups. And then I can look over here. Oh, this is interesting. Yeah. I can go 1 day performance. And you can see in the S&P 1500, which isn't 1500 right now, well, I guess it's 1506, I have 500 winners and 990 losers, which means I got some that were ties. If I go largest to smallest, I could see that the best winner here was up 13%, which was Disney. So I can see what's working now. Now, this is the magic button with the 3 stars. I'm going to bring up fundamentally, okay, fundamentally, what are stocks that are undervalued and have earnings per share growth. And I brought up these 2. Now, I will tell you, just because they're here doesn't mean they're good buys. You have to be doing this every day because they may have run already. But if I look at Worldwide Wrestling, for example, It's got great 2 years and 3 years earnings per share growth. It stubbed its toes over the last year. But you look at the last couple of quarters, my God, it's on fire. It's actually grown revenue. It has a small dividend yield, and it is 34% off the 52-week high, 52% off the bottom. So it has run some. And then I could basically highlight these two, hit the checkerboard here, go into, which I already did, I'm going to put them right here, hit paste, and I could look at these within TradeStation, and I could see this one looks like a buyout, or it's something's happening. Core logic, maybe, yeah, it's very gappy, so I don't, or not gappy, it's very bump, sideways. I'd have to know more about it. And WWE didn't look that attractive right now, and it didn't look attractive because it's running into resistance. But had this showed up on my screen right here, that would have been a potential to play with. So if you're a fundamentalist, you're not necessarily buying things because their charts look good. You're buying them because they're undervalued. So this is Q Tools from Sagar, and it's an awesome real-time tool that allows me to look at the market from a top-down basis, identifying some stocks, and then looking at those stocks and to see if anything looks attractive. Now, the other thing I could have done, and I'm just going to show you that. This will probably be a long one today. Maybe I'll take next week off. I don't know. I'm going to open up Q Vital. It's going to take a second. Q Vital allows me to take a stock. So let's do this. Let us go in here, WWE.N, and it's going to pull it up. And it tells me worldwide wrestling, movies and entertainment. Price is $44,252. Then it gives me a list of its peers here, including stocks that are not S&P 1500. Tells me that only half of them were positive, so it's not really a rip-roaring strong group. The deep bright blue here tells me that it's undervalued. I can go into a peer analysis here. These are the fundamentals across all the other stocks. You can notice you got one leisure products because it's got a similar business, one electronic equipment, but for the most part, these are all movies and entertainment. I go to my Magic 3, and what comes up? WSGOG. I don't know that one, so let's go look at that one. So this would be another stock that has undervalued with high earnings per share growth, and it's short squeeze potential, so that might be interesting. So you notice how I start to use all these different tools together, and I did it wrong. Let's try that again, Jeffrey. I should be able to highlight them. That's what I forgot to do. Then I click this. Then I go over here. I mean, Sagar is like updates these things every week and gets new functionality. So this is a really cheap stock. Probably too cheap for me to look at, but let's see. Yeah, it's running right into resistance. I'd have to break above resistance before I would care. I don't trade $2 stocks, so that wouldn't help me. All right. So, love those tools. Let's turn it off. Let's go forward. Canaries in the coal mine. I follow this, yes. One day I will actually change this and make that bookings in the chart. Notice the hard sell-off on Wednesday on the Canaries. Did it damage it? It stopped at the 8-day exponential. It opened at the 17th on Thursday, and there was a lot of here we go again. And within a half hour, I was positive on the day and had a very strong day, as probably did all of you. And then we had a super strong Thursday. Friday didn't do much at all, down a little bit, but really nothing of a day. We're right off all-time highs despite the sell-off Wednesday. So I have a hard time hanging crepes and singing Funeral for the Dead for the bull. But we're definitely got a little COVID action. Know your news and earnings. Couple different things. Fed chair press conference and FOMC announcement on Wednesday, 2-day meeting. What do you expect him to say? Things have gotten worse since the last meeting. We're going to keep rates low forever. We might increase our easing, which will make the market happy, and the government needs fiscal stimulus. I mean, if he says anything else, I'll be shocked. The thing about additional easing would be a bonus. So I'm not too worried about that, okay? We also have Brexit going on, and today they had some positive signals that are continuing their discussions. We got industrial production, housing, jobless claims, Philadelphia Fed on Thursday. And we also got, after the Fed meeting, we've got some Fed heads speaking, Charles Evans speaking. So there's a lot of stuff going on, and we have quadruple witching on Friday, so it could be some volatility with a lot of options expiration. My list of holdings is going to go down by 2/3, I think, on Friday, just because everything expires, and I got a lot of things in the money. You do have a number of things having earnings this week. FedEx, which looks set to go down. Technically, Winnebago, which looks set to go up. Hard for me to play either of those with earnings coming. I'm not sure I'd want to be in them at earnings. There's too much risk. As I quoted here a decade ago, it's a judgment call to hold stocks over earnings. It is bad judgment to not know when your stock's earnings date is scheduled. Strong seasonality. Using Edge Rater. Why go pay $10,000, $5,000, pay $50 monthly fees when on Edge Rater it comes in package? I can take a list of any stocks and I can ask that list what's performance in 2 weeks, 1 month, 2 months, 3 months, 4 months, 5 months, 6 months. I found the sweet spot for me to be 1 month, although maybe I should look further at 2 weeks the way this market is. I then run all the stocks with 20 years worth of data, and then I filter them that you have to have at least 8 wins and no more than 3 losses. And then I look at those and I look at, oopsie daisy, sorry about that. What is the average 1 month return? Up, down, percentage of wins, and then I multiply percentage of wins by the average return, and I bring the top of them, the best up to the top. So, if you knew that over the last 9 years, NGL Energy was up an average of 13%, would that be meaningful to you? Might be to me. Not saying to buy it, I haven't done any research. PIMCO High Income Fund, not my kind of toy, up 16 out of 17 years, or 94% of the time. Average return 9% over the next year. Those are pretty bullish numbers. I don't know anything about CRMD, but I'm going to go look it up. CarMedics, last 10 years, it's up 80% of the time and an average return of 30%. So this is seasonality. This is making it an edge. You're probably asking yourself, where's my Netflix trade? Give it a couple more weeks for it to pop up, because you start buying Netflix the end of December, early January. So we're a couple weeks away from that. These are all the stocks in my universe of 2.5 and 500,000 shares that have more than a 4%, so a 5% and higher seasonality. Now, notice I highlighted some green things. I had semiconductor 3Xs, S&P 3Xs, biotech, real estate 3X, energy 2X, and 2X S&P 500. Those are all bullish ETFs that made the strong seasonality. Look over here on the right. These are bearish 1 month seasonality. Do you notice anything special? Yeah, here is the who's who of bearish ETFs. Okay, finance bears down 9% average, 10 out of 12 years down. That's pretty darn good. Emerging markets bears down. So if all the bear market ETFs have negative, bad seasonality, paradoxically that means it's good for the market. So, thoughts. Each of the indices set incremental new highs midweek, but the market grew tired at the back end. The Russell still managed to close higher for its 6th straight weekly gain. News continues to dominate. I forgot to put Brexit, but vaccine approvals, congressional gridlock, POTUS and SCOTUS, COVID surge, ICU shortages, and despite good economics, retail economic data, the rest is mixed at best. IPOs, well, a lot of that money is going into IPOs apparently, with Airbnb, DoorDash going nuts. Cuckoo, kind of like Snowflake. Markets continue to consolidate near the all-time highs. Look at the Russell. It was down 30% after the market rolled over. It's now up 14.6 on the year. I felt like I was personally on Mr. Toad's wild ride this week, because I broke the 200% gain on the year on Tuesday, but had my biggest down day of the year on Wednesday. Holding too many positions is great when market is in strong uptrends, but you set yourself up on down days. Using portfolio margin accelerated my gains, and on Wednesday my losses. Finished up on the week though recovering some of the losses on Thursday and Friday, and I was very positive on Monday, Tuesday. So net I was up about 100 grand. I am up about 180% and $2.5 million in my primary trading account. My best stock of the year is SE, and it's not even in that account. I trade mostly options and have a lot of expirations this week. I started to take some off the table on Friday, protected others with married puts. My goal is to trim going into the end of the week and then have some cash on the side if we get a Santa rally. If not, I want to lock in my returns and eliminate any wash sale problems. As I demonstrated, we have a bulls versus bears conundrum. My look at the daily charts and my top-down review makes me believe we are going higher. The seasonality says we are going higher. However, we do have a megaphone, and we're sitting at the top line, and tax gain selling might extend beyond big cap tech now that the rest of the market is caught up. I do wonder how much of the sideways movement in Amazon when the rest of the market is flying is because people are taking their long-term capital gains. Trade safe and safe travels. I am not planning on traveling this holiday season, so I should be posting again next week. I will likely announce a live year-end review as well at that time. All right. Now, I know I've talked a lot. We're at 47 minutes. We haven't even looked at anything. I think I showed you some good stuff, so I don't care. Very quickly, I like to look at my markets and divergence here. S&P future, no, there's a NASDAQ. Here's S&P futures. You could see we're still in a buy signal. We did sell off as the week went on. Our weekly bongo is green. We did get up on the high jump. We closed on this day at 76. We were at 87 the day before. We got up to 100 before we rolled over intraday. Interesting, the Laguerre RSI is also negative here, so maybe there's some more weakness coming in the S&P 500. I'll see what the market gives us. Bearish, the MACD bearish red here is also concerning. If I look very quickly at the NASDAQ futures, sell signal. Let me go back to the E-minis. Did I miss a sell signal buried up here? I don't see one, do you? All right, so the NASDAQ futures actually in TradeStation triggered a sell here with the Laguerre. It pulled back. Still in a buy weekly and monthly. Also the Laguerre sell signal. Don't look as strong as they did, do they? The Dow futures, you got those MACD divergences, still in a buy signal. And the Russell, I'm sure, still in a buy. But notice the little red dots. Again, why do you see those? It's simple. We go to tools. We clearly, oh, come on, Jeffrey, have higher highs on price, but we don't have higher highs on the MACD. And if we look at lately, higher highs and nowhere close to higher highs on the MACD. So we got MACD divergence, and that often signals before the market pulls back. We are in rarefied ground here. Look at the high jump on the Russell. It was 90. The day before was 98, 96, 92. Hit 100 up here. You know, we're extended on this market. It's also great seasonality. So it's the battle of the bullish seasonality and everything else that might make us a little bit nervous. Let's take a quick look from a top-down perspective using HGSI. Again, I apologize in advance. I talked a lot today. We're going long. You don't have to watch it to the end, but I'm going to do it for those that want to. All right, 28 different instruments here. I'm going to go to the top-down view just to get a sense of what's working, what's not working. Strength was in industrials, biotechs, and breakouts, IBD 50. Commodities, that's interesting. And weakness in gold, volatility, semis, silver, treasuries, and others. All right, so FANG's right in the middle. Let's pull up the S&P 500, and let's very quickly go through these. I have not updated this is a different computer than I normally use, and I have not updated all my different groups and filters and views forever, and that's because I don't change them. I get good at something, and I keep using it. I mean, there have been more and more comments about when am I going to update it. Let me remind you how much I charge for my service. Yeah, $0. I don't get paid for this. I do this because I'm a nice guy and a volunteer. Ron Brown updates his all the time. That's what people tell me. Of course he does. And he charges $200 to be a member of his club. I pay that because I think Ron is brilliant. And I like listening to Ron, and I like using some of his stuff. But, you know, I'm an unpaid volunteer, so I will update them when I have time. I haven't had time. And I haven't had the need because they don't change. So last week I talked about this 127.2% Fibonacci extension that I thought this might be a place to reverse, and we reversed there. We've just pulled back to the 17. We still got a bongo green. We had a red candle high here. Have not flipped on the S&P 500 in the person buy signal. And if I look at the weekly, I see nothing that makes me nervous. Okay, let's look at the Dow Jones Industrial Average with the same tools. And here is the prior high. We are still above the February high. Is there any damage done there? No, nothing changes in my mind. You know, the market's at a high place and it's risky, but that doesn't say we're going down. Russell, it had a doji on Friday. How it opens is important, but it's in an up channel and it closed right in the middle of Thursday's day. And, you know, it's above the lows, way off the lows on Wednesday. Hard for me to sit there and cry that this market looks horrible. The NASDAQ composite, yeah, it pulled back a lot, percentage, you know, dollar-wise, not percentage-wise. And lo and behold, it's still above the 161 retracement, which happens to be where the 50-day moving average is, and it abruptly stopped at the 17-day. Maybe that's all she wrote, and we're going higher, folks. Wouldn't surprise me. I'm going to watch lines of defense at the 17 and the 50. High road scenarios, we bounce and go higher. Middle road scenario is potentially we stay in a range, a box that might be, you know, is our box going to look small like this? Or is our box going to look a little bit bigger? And that's my middle road scenario, would be that box. And clearly dropping below that 50 will be nervous and would be the low road scenario. So, you know, hard for me to be very bearish here. I just want to be realistic. Look at how far we've come. How far, you ask, have we come? Well, just in case you forgot, I mean, I may have good return, but I'm not that good because it helps when the market's your friend. And if I come off, where did that's not what I wanted to do. Darn you. Let's go to this line. From the low to the close on Friday, we are up 86% in 184 days. Wow, that is amazing. All right, 1% per trading day. So I guess I should be up 200% on the year yet because we had about 200 trading days. All right, let's look at a few other things. I looked at the Russell. I can't remember, so let's put the Russell up. I think I did. Yeah, Russell I talked about. Let's look at the 50s, IBD 50s. You know, hard sell-off on Wednesday, ended up in the week in the middle of the day's range. Kind of looks like it didn't change much on the week, and it had a doji on the week, so no surprise. So despite the sell-off, not much happened on the IBD 50. I have to find out more what's in the ID breakout opportunities because it's leading again. They broke out. Does that mean breakouts are working now? I can't say that. I want to do some research on that. Microsoft, not the microsectors, FANG stocks, up near their highs. Still have to get back up to here. So that they passed that. This is the next stop up there. So how can you be bearish on that? You look at semis. You want to see what looks bullish or what has been bullish. Semis. Orderly pullback to the 17 in a doji bar. If that looks to me like if it opens up higher on Monday, it's going to go back and test those highs. Bullish. Biotech. Near all-time highs. Again, I play LABU here because I got a lot of NDAs out there. Dollar. We talked about the dollar probably looking like it's starting to bottom and maybe move up. You can see that here. It's got lots of overhead resistance. And oh, by the way, anybody who decided that the bottom was in and I'm buying the dollar here are losers. And they want to sell when they get back to even. So what is that going to mean? It's going to mean there's going to be continued downward pressure, I think, on the dollar. Now, you get above this point here, and maybe the dollar, it gets rid of all the short-term overhead supply and maybe it moves back up. But I think there's still going to be some downward pressure on the dollar because of that overhead supply. Oops, I did not want to do that. Let's take a look at the VIX. VIX is low. Gold and silver have not been friends, especially with the dollar going up. Gold just doing nothing, still above the 200. Silver at the 50, and gold miners drop below the 200. Next thing I like to do is go to industry group 7, hit warehouse view, I pop up 175. 2-day up, I have 31. 2-day down, I have 34. So there has clearly been a change of the guard because these used to be very positive. So that might be a little bit concerning. What's negative? Automobiles, electrical power, airlines, which have been running. You could see the index of airlines pull back some this week. Tesla pulled back, so that's probably what's driving this. And I wonder if NIO hasn't topped already. Let me get this to get this. NIO is pulled back as well. One of the tools that or tricks that I've been doing is I've gotten tired of these days. I'm getting tired of these rockets up and then setting in a high and that's it for a while. So when I get these big spike ups, I've been buying puts and selling calls, and it's protected me on some of the things that have pulled back, and every once in a while it gets taken away from me. But it gets taken away from me on my terms at a high rather than as a low. I've done that with NIO a couple of times. Same thing with Wild Workhorse, rather. Casinos have been strong, and you can see just a little pullback. I don't consider that very weak. Let's go look at where the strengths are. Take a look at a couple of those. Biotech. Yeah, interesting stuff. Celis, don't know anything about this. You know, when I bought Tandem for $3, $4, $5, $6, and then it went to 120, it looked a lot like this on the weekly, where it had this crazy ass, excuse my French, move after doing nothing for a long time. I can't say anything else more about it. Look at the demand. Volume on Friday was 30 million shares on a nothing. Maybe there's a story, maybe it's just a bunch of Robin hitters. Maybe my son is buying it. So solid is doing a real solid in my book. This is the move I don't like. Bubble breakout from a squeeze. Kahuna looks great. And it had 193 million shares sold. The stock averages on 50 days, 2 million. Those, to me, most often, you don't get them at the bottom. You likely buy it at the top, and then you sell it at the bottom. I do take the second moves. So we just had another move come in on Friday. with huge volume, 39 million shares. A Kahuna Bible gap up. I'm going to look at this week. It made my buy watch list. It still looks a little crazy. Curus, another one of these nothings that all of a sudden got data. There's a reason. Curus, I believe, had some data presented at the hematology meetings or the breast meetings this week. So Curus has probably got a cheap market cap. Its market cap is 464 million, which is cheap for a healthcare stock. Or look up FinViz. What was the news? Promising phase 1 pipeline update. So and of course, what do they do? Secondary. The killer of all these runs are secondary. So when the runs are real, if your stock's been $2 for the last 5 years and your stock pumps to $8 a share and you look at the bank and you need money, you sell stock because you're getting much less dilution than if you sold it at $2. So a lot of these stocks are doing secondaries. Novavax, man, I struggle with this in Moderna. So Novavax is sitting here, an interesting buy point. I have no issue with it. Its market cap is almost $8 billion. That seems okay. They're one of the warp speed vaccine stories. Pfizer's out. Moderna will be out soon. J&J is coming up behind them. How much money are going to be in these vaccines? And I'm going to look at Moderna's market cap in a second. And hopefully you'll be like me and you're going to scratch your head too. Does it go higher? Probably. Long term, probably not. Don't know anything about Veru. It looks like the other cheap ones. Editas, another one that had some good data and a big run. Rocket, don't know anything about this. Let's see if it had a secondary yet. And let's see if, I'm laughing, but it's what they're all doing. What was the reason why Rocket rocketed? Surges on encouraging study data and prices upsized public offering. It's like broken record. Good data, price spikes, sell stock. That means you can buy it cheaper. Doesn't mean it's not going to go higher. And I would be doing the same thing. It'd be like taking profits off. Translate Bio, run up, pull back to the 17. This one looks interesting here. Bible gap up, mobile breakout, Kahuna. These are little companies. This is what happens after major meetings when they present their data. Sarepta. All right, let's see if I can find Moderna. I think it's mRNA. Let's see. I just want to show you something with Moderna. Big run up. Look at that market cap. $62 billion. Let's look at their revenue. This was upfront money. Notice the blue, the red is revenue, it just spiked, related to, I think, COVID development. But if you multiply that by 4, multiply by 10, you got 10 would give you $1.5 billion in revenue and what was it, 62 billion. Boy, is it expensive. Now, out of curiosity, let me see which one of these is real. Sarepta has a drug for multiple muscular dystrophy. It's a real company. Its market cap is $13 billion. Seattle Genetics, I love this company. I love their chart. 3 different cancer drugs on the market. It's a stock's at a great buy point. In fact, I did a program for them the other day, and I looked at their stock before the program. Of course, I'm not allowed to buy them because I might be subjected to some insider information. And what did I see? Pull back to, this was last weekend, pull back to trendline support. 1, 2, 3, 4, about 5 times it's hit this. That's good support. Had a new person weekly buy signal. Has a green bar here, breaking out. If I look at it, some of the traditional things I look at, what a beautiful looking chart, CGen. Of course, you can buy it based upon the technicals. I can't. And its market cap is $34 billion with multiple drugs on the market. Let's find another one. Gilead's a big one, so I'm not going to. Halozyme, love this stock, love this company. All right, look at this move, 14 to 42. I'm in it, Kathy's in it. Wish I would have sold some puts on this day. 5 billion. So I go back here and I ask the question, how the hell is Moderna valued at $62 billion for a vaccine that we're going to get for free? I think I have a word for it, and I'm going to memorialize it on the chart. Can you say tulip bulbs? And those who've been trading for a long time will know what that means. 63 billion for a vaccine. Great company, great people. Thank God for them. I think it's a little overvalued, folks. But what do I know? I sold out back here. All right. I'm entertaining today at least. Exploration and production very quickly. I talked about Oxy last week. Should have bought it. 1, 2, 3, 4, 5. I still think Oxy looks good and goes higher. Why do I like it? 3.9% dividend. It's coming off the bottom. Oil prices have definitely come up. Stock prices have not come up like the oil. I think Oxy continues to look interesting. And then you can pick them. SM, Antero, Diamondback. I'm also in Diamondback. It had a great week. I can go to Diamondback. I initiated my trade in Diamondback thing when it was a lot cheaper and I had a Scott synthetic, and then the shorts are gone. So I'm in January 15, strike price of 30. I bought it for $7.24. It's currently at $20. So I'm up 3 to 1. Plus I made money on the short position, which is gone. I like Diamondback. They all have the same chart. It's probably not too late on some of the oil explorations. Application software, these were on fire. MongoDB, great earnings, big move. I don't chase. Twilio, I can't buy most of these. Dropbox, Smartsheet. I did talk about Smartsheet 2 weeks ago. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, breaking out here. I could have bought it here. I can't buy it here. Just, my goal today is not to show you winners. Go back 2 weeks ago. I talked about Take-Two Interactive. I want to buy things breaking out from a base. I don't buy things at all-time highs unless they're breaking out of a base or they pull back. It's just my style, and it works for me. Back. Entertainment content. Walt Disney. Boom. Bible gap up. I would have bought it on this one. I missed it. I hope you didn't. I'm getting tired. You're probably getting tired of hearing from me, so let's just go right to my buy watch list. Actually, let me show you what I like. I'm going to open up this list, and I'm going to go into pullbacks ready to run. This is where I make my millions. Pullbacks ready to run. Calyx. Let's look at this stock here. This was a good buy point. Had a Bible gap up. I don't usually had a mobile breakout and a kahuna. So I would have bought it the next day if it traded higher. Pull back to the 50-ish over here. Mobile breakout from a squeeze, a person buy signal, and a kahuna. Okay, breaking out here again, isn't it? All right. Mobile breakout, pocket pivots, kahuna, new person buy signal. What do I have here on Thursday? Mobile breakout from the squeeze, person buy signal, kahuna. I like Calyx here. All right, it's kind of in and up channel. And if I'm lucky, oops, don't do that, Jeffrey. Am I going to get something that's going to be running up this and I'm buying it off the bottom? I could live with that. Okay. Next one on that list is Chemocentrics. Yes, Kathy, it's back. Sideways move. Why do I like it? Squeeze. person buy, pocket pivot, mobile breakout, off the 50-day moving average, certainly not extended. Cinemark Holdings, beware. I think they talked about filing for bankruptcy in the first quarter unless something changes. This is in that movie theater, movies and entertainment category that came up with Sagar's tools. Mobile breakout from a squeeze. Person buy signal yesterday or day before. Pocket pivot, kahuna. All right, this is where I like to buy. Copart. I mean, hello. Great uptrend. Sitting on the 50. Mobile breakout from a squeeze. Pocket pivot, kahuna, person buy. Let's take a look at how I would play Copart. Of course, I'm going to do all this and it's going to go down. So, I'll open up this thing here, which is the window that tells me the pricing. It closed at 116.98. The high was 117.50. So I am going to be interested in buying this puppy at right above the high. So I'm going to call, that's going to be, whoops. I'm going to buy stop at 107. What did I say it was? Hold on. 117.10. All right. Hope that was the right number. Let's see. Yes. I want to sell this the low on this date here is 111.95. Okay. I like that. So let's get a sell stop here. Sell at 111.90. Okay. Let's pull up a calculator here. This is how I do my trades, every one of them. So my buy stop is at 117.10. My sell stop is at 111.90. Means I'm risking $5 on a 117.10 purchase. So I've got a 4 times 100, make it easy on your math. I got a 4.4% risk. All right, so I'm risking $5.20. So for every $10,000 that I'm willing to invest in here, on $5.02 risk, I can buy 1,923 shares if I have enough cash and risk $10,000, which is what I'm willing to risk on this, which gets me a big position. Now, what would have happened if instead of this being 5.2, it was 12? It changes everything, okay? If that was 12, let's see, do the math right. So back to my 10,000. $10,000 of risk I'm willing to take, but it's going to be $12 of risk per chair. I can't buy 1923, I can only buy 833. The benefit to me of finding stocks that are basing is I have a very well-defined risk. I haven't dropped below this amount since it broke out here. It's enough room to breathe. I've got the 50-day underneath me already. I feel very good about this trade. And if I lose $5 a share on a $117 stock, I'm okay with it. What is the biggest problem with this trade? Look at the weekly. I'm right down here at a nice, great area putting my stop. Biggest problem here is I can't fight gaps. Even look at Wednesday, it didn't do any damage. Look at the earnings per share growth. It's growing its earnings. I like this stock. I love the pattern. That's how I trade it. Now I would have gone into Thinkorswim, and I will go to trade. I'll pop MCPRT. It's already end of December, so I might go look at a February, and I'm going to look at what is an option at the money call. Let's say $117. It'll cost me $8 to own $115 calls. All right, I don't like that. That's too much money. I want to look at a synthetic. So what if I change this here, hello, to a collar synthetic. So now I'm going to buy a call and sell a put at the same price. So for $2.80, I can control a share of the stock. Now, the good news is that this will run the exact same P&L as buying the stock would. The good news is every dollar goes up, I make money. Every dollar goes down, I lose money. A lot of people won't want that trade because of the risk, right? If you bought the stock, you have the exact same risk. Tell me why it's different. I didn't hear anything. Because it's not different. Just you have to be careful your position size. Don't go crazy. Let's go back. Let's say I'm going to do a safety play. So I'm going to take this option here. I'm going to hold down my control, and I'm in and out at 115. I'm going to do a 110 or a 105, 110 or a 105. Here, I'm going to buy a 110 put. Well, gotta make sure I gotta make that a buy. So what I've done here, I'm going to show you on the Analyze tube. I've created a trade that for $5.53, which was how much I was willing to lose, I am going to control a 10 contracts of 100, which is 1,000 shares. So my price is going to be $10,000. Okay, forget the buying power. My maximum profit is infinite. The most I can lose on this trade is $10,500. Why is it 10,000 when it's only cost me 5,000? I'm going to show you why. This is a great trade. Analyze. The purpose of that trade, I got to take off the first one, I'm sorry. Did you notice anything different about this trade? Let me tell you what's different. Here's where we are today. I'm going to pay for this custom option here. Let me kill the other one. $5.53. I am going to control 1,000 shares of stocks for $5,500. $530 instead of having to pay a lot more to control 1,000 shares. Since I'm paying $5.53 for my option, it's got to go up to $120.54 for me to break even. I'm buying this because I'm bullish. So one of the downsides of an options is that I'm paying a premium for the right, but not the obligation to buy this stock. So it's got to go up 5% for me to be profitable. If I bought the stock, it goes straight, remember? In fact, let me add stock here. Let me go back to trade, and I'm going to just buy stock. So if I wanted to buy 10 contracts as 1,000 shares, so if I wanted to buy 1,000 shares, it's going to cost me $115,000. Remember, this trade here has cost me $5,000. Let me go ahead and analyze that one. All right, so here is the, I'm not shorting stock, I'm buying stock. All right, hold on. Here is the P&L curve of the stock. If I buy and it goes up, I make money. If I buy and it goes down, I lose money. What's different here? If it goes up, I make money, and I've maxed my losses here at 10,500. All right, if that's too much, then you buy half as many contracts, 5 contracts. And if Copart gaps down to here, all I can lose is that defined risk because of that protective put underneath the synthetic. Hence, I call that the Scott synthetic, and I know Sager and others are making money with it. The downside of that trade is if I take off the protective put, let me go back and build it over here. If I take off that protective put, so let's just go to synthetics. $115 buy. I'm buying it for $2. So if on the synthetic, it's just got to move $2 for me to be making money. So enough of Copart. That's how I think. End phase, I already own it, love the stock, made some money on it. Sideways move, mobile breakout from a squeeze, person buy, pocket pivot, and a kahuna. Broken record, it's going higher if the market does well. It's a high multiple stock, so it's the kind of stock that could also crater on you. Know what you're buying. Generac, how many of you made money because you bought it when I told you to buy it over here when it broke out and went above 100? I know plenty did because I got lots of emails. It's ready again. Mobile breakup from a squeeze. Kahuna. The only problem with this here is this is the chandelier stop. And the safer trade, higher likelihood of success trade is to wait till it breaks above the chandelier. Too far away from me, I'd probably buy it here and have a tight stop. Horizon Therapeutics, it's ready to run again. Yeah, I'd like it to pass the chandelier, but it broke above the 50. These are my favorite stocks. IAAA, big uptrend sideways, uptrend sideways, uptrend sideways, uptrend. Mobile breakout from a squeeze, a new person buy signal, pocket pivot, kahuna. How do I find these stocks? I'll show you in a second, and then we're going to say goodbye. Novavax, we talked about. Papa John's Pizza, too much of a downtrend. Quidel, I'm just stuck on this thing because of its earnings, but it's at an opportune buy point, in my opinion. Renewable energy uptrend sideways to the 50. Mobile breaking from a squeeze. Person buy signal. Pocket pivot. Kahuna. Broken record. The best part, Will Scott, same thing again. The best thing about those stocks is risk control. This one moved a lot. It's still going to be minimal risk because if it goes beyond your stop, it eliminated the reason you did the trade. Lastly, if you have the person, you don't need the persons to do what I'm going to show you, but it's something I gave out as part of the person buy package. And again, just in case you haven't heard me say it before, I make 0 on that package, purposefully. I did a whole thing called pullbacks in an uptrend. In pullbacks in an uptrend, I have one that's uptrend near free parking, uptrend near 20-day SMA. Let's look at the 20-day SMA one. These are all the stocks within 2% of their 20-day SMA. That's too many. Don't want that. So how about how many of them, this is the works. These are stocks that are $2, 150,000 shares above their 200 within 2% of their 20-day SMA, and they have, let me look at it this way. They have things like, let's look at it. Hold on, is this the right one? Let's look at the filter. We have a mobile, breakout, squeeze, kahuna, and a PBS buy. So these have all the works. So what do you find on this scan? IAA, and I don't know EPS, too loosey-goosey. How about, I don't need all those things, let's just cut back, mobile breakout and a squeeze. There's your copart. Too loose, Fastenal, little loose. Generac, I already showed it to you. Universal Forest Products. Expeditors International, interesting. CoreLogic, I need to know if that's a buyout. LGI Homes. I let the scans do the work for me, except on the weekend when I look at 500 charts. So I always end by giving you a clue at my buy watch list. Buy watch list, not leaders list. This is a list of stocks that have criteria that I will look at closely, and then will follow these stocks over the week to determine if any of them get to be interesting from a buy point. There should be 32, is that it? 32 stocks this week, folks. That's all I found that in this extended market I was going to jump at to see if there's anything else I wanted to show you. Don't know EXPI at all. Didn't make my pullback to 50 and breakout because it's already broken out. That would have been buying here. Breaking out to new highs. Thought that was interesting looking. Solar Edge is another one that's pulled back. It's a little bit above the 50. Car Gurus. I don't know much about this company. It's been below the 200, so I've never paid attention. Breaking out here. Good earnings per share growth. It's in that communications group. Tractor Supply. Uptrend. It's pulled back more than I would have liked it to, but it's sitting right below the 50. Look at stocks gone down and person market catcher's gotten stronger. Tractor Supply looks interesting here. I already showed you Seattle Genetics earlier. I can't buy it, but you can. I didn't give you any insider information. I don't know any insider information, but just in case some idiot thought I did, I wouldn't. I'm being clear. Sideways move, breaking out Chemocentrics. I don't usually buy Papa John Pizza, but it's sitting at an interesting buy point after a pretty significant sell-off. Then I want to show a couple different things here. Where is that? Huh. I talked about AT&T over the last couple of months as you want to buy it when it's bad. So now you've got growth in AT&T and you got a 6.7% dividend. And I did start buying it when I told you to buy it. And if I look at AT&T, again, I already covered the short position. Actually bought shares of this because of, I want the dividend. And I made a little bit of money on it, not much. But the point of buying AT&T, it's not a big growth stock because I want to capture that 6.7% dividend. And if you're kind of interested in that, then you want to look at this one. Do your own due diligence, same type of a chart pattern, breaking out. Been in a downtrend, looks like it's reversing that. Telecommunications to Sao Paulo ADR, VIV, pays a 9.5% dividend. On that note, I've talked way too long. Have a great week, safe week. And the next time you're paying somebody to tell you how to trade and teach you, ask to see their P&L. Goodbye, everybody, and thank you.